Hello everyone, a very good morning, good afternoon and good evening to all of you. This is your host Vaibhav. In today's session of JForex Indicator Explained, we will be looking at a candle formation, the pattern recognition using the Japanese candlestick formation. This is a Doji star, and in yesterday's session I had explained to you the formation of the doji, and if you remember, the doji simply means same, almost the same. It's a Japanese term, and this formation happens when we have the opening and the closing level which are almost the same. That's why this is named as a doji candlestick formation. So let us now head to the JForex 4, the newly released trading platform from the Dukascopy Bank SA. This is the USD JPY chart with the each candle period defined at hourly time frame. Now, to know where this formation can be found, there are two options to go about it. You can go for this add indicator option using F3, or you can even do a quick search, type in the Doji star, and you will have this formation being pointed out whenever it has formed on the chart. So here I am adding it, but just to make sure that you know where it can be found, I'm also giving you its exact location. It can be found in pattern recognition. Here you will get it just below the Doji formation, Doji star. Okay, so I have added it to the chart. Let us see if we can find one of the example. All right, here it comes. Now the Doji star formation is simple. It involves the formation of the three candlesticks, where the middle candle, now in this case, as you can see, the middle candle needs to have its closing and the opening price almost the same, the price level. There should not be much of a difference between the opening and the closing price. That's why I'm using the term almost same, and it's called doji in Japanese language. And it can have a long upper shadow or lower shadow. It doesn't really matter. The only thing is that this closing and opening price should be around the same level. Now there are two formations of the doji star. It can be happening when the price move happens, or you can say it takes a turn from bearish to bullish, or it can even happen when price action turns from bullish to bearish. In this instance, this formation is involving the slight bullish turn of event in this case, though it didn't really last long, and eventually it resumed this downtrend and the price went on to decline further. That aside, the formation simply involves three candles. The first candle should have long body, the real body. The difference between the opening and the closing price should be good enough, and the formation in which we have this bullishness in the third candle needs to have the first candle with the bearish undertone. This closing price needs to be lower, and as I said earlier also, the difference should be good enough. Now it is also a relative concept, so you will have to always consider the difference between the opening and the closing value in recent past, and that gives you a good idea of what kind of difference should be good enough. So you will have to take it in relative terms. Now it should have real long body. There should be decline in the first candle, and it can have a shadow on either side, on the higher side or on the lower side, it doesn't matter. Then in second candle, the opening and the closing price should be the same, and then comes the third candle in which the closing price needs to be higher than the midpoint of the first candle. So that means there were good enough gains, substantial price gain in the third candle, and it should go on to close above the midpoint of the first candle. So that is the requirement. So we get this formation of the doji star using this price reversal mechanism. Now let us find a formation where the invert has happened when the price turned from bullish to bearish. So we will need the first candle to be rising. Its closing value needs to have been on the higher side, and then the price took the turn for reverse. So let's see. I'm yet to find it. Maybe we will have to change the instrument, or okay, all right, I got it here. Now in this formation, we have the first candle with the real long body on the higher side. The closing value is higher compared to the opening price, and then in second candle we have this closing and the opening price, which is almost the same. It is near about the same with this long shadow on the higher side. Then this third candle is there, but in this case the closing level is not really below the midpoint of this first candle. So I think we will have to eliminate this formation, but it does involve this middle candle which has this doji formation. So again, let's go back in time. Since we are dealing with the formation on the hourly candle period, it is not going to occur too frequently. Maybe if we lower the candle period, it might be unfolding quite frequently. Let's see if we can get lucky. If we simply change this candle time frame, last week the market were not really seeing any action as most of the traders were away for the holidays. So let us go back in time a bit more. All right, 26th of December. Let's go back before 24th when there was some action. Okay, we are in 22nd now. Let me see if I can find. All right, here we got it, the perfect example. Now in this case, we have this long candle body. This closing value is high enough, and as I said earlier, also we need to look at it from the relative perspective. So whatever has been the average difference over last couple of candles, prior candles, you will have to consider those candle formation and then look at the body of this candle. Then the second candle should have this closing and opening price which is almost the same, and third candle should have the closing value which is below the midpoint of this prior first candle, and here its closing value needs to be below the opening price. So we have this example here in which we have the bearish doji star formation. So this is a formation involving three candles, so you have to pay attention to the price action data also and take into consideration the difference of the closing and the opening levels for all three candles. Middle candle needs to have the same. The first candle should have good enough momentum on the opposite side, and then third candle should confirm the reversal after the closing of second candle on the same levels. So that's how you get the confirmation using these three candle formation. Then I think if you keep the stop loss, suppose if you get a bearish doji star formation where you expect the reversal from these levels, maybe then if you provide good enough buffer, slightly small buffer will need to be provided just little above these immediate swing high, so you can go for a short sell trade. And when you have a formation where there is a possibility of reversal from bearish to bullish, you can go for that also, with the stop loss being closer to the immediate swing low, and that should suffice for your purpose of optimizing the trade entry and exit point. So suppose if here you were to go for a long trade, I think a stop loss just little below this immediate swing low should have done the job. and in this case you would have suffered some losses, but the losses would have been less, and as is the case with any other formation, the formation is not going to work all the time, so you do have to keep that in mind and go for a entry point which is going to have a favorable risk reward ratio. So keeping that in mind, you can always work around the system and find the optimum entry and exit points. Now let's see what we can do to customize it further. The input, there is nothing we can do about it. It is always going to take into consideration the price action data of last three candlesticks. And as I said, the middle candle is important. It should have doji formation, and the first and the second candle should have the closing values in opposite side. If the first candle is on the rise, then the third candle should be in decline. If the first candle has been declining, then the third candle should be on the rise. So that's how you get the formation. Then comes to output. The output can be customized only in terms of the styling. You have this option of going for a bracket formation, or you can even go for a whole body color combination. So in this case, this candlestick has been colored blue. So these two options are there. You can go for a color combination of your choice. Suppose if you like brighter shades, you can do that as well. So here you got it. All right, then comes the advanced editing. Recalculate on new candle only. This is not going to make much of a difference. So you can opt in for this. Highlight the time period zone. Only three candle formation is required, so it is also not much meaningful. Customize from the candlestick. We can't really do that. The only thing here in terms of customization is if you want this formation to be available on all the candle periods or not. Suppose if you want it to be available, then you have to keep in. Else you can specify on which particular candle period you want this formation to be recognized on the chart. So only on that time frame you will have this plotting. Now here, once in a while, you will see this doji star formation being pinpointed on the chart by this bracket formation in yellow, bright yellow color. But suppose if I change it to the 10-minute formation, there is nothing. Now that pattern is not being recognized. So in this way, you can have multiple indicators, multiple formation being recognized on different time frames. So it makes it easier for you to go for figuring out the setups using multiple methods. You can have different formations on different time frames, and then you can combine all those data points to figure out the opportunities to trade. So everyone, that's all from my side for today's session. If any of you have any query or any idea to share regarding this candle formation, do write to me in the feedback, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to, of course, remind the risk associated with usage of this formation. As is the case most of the time, the profit might come your way, but it is not a certainty, so you do have to keep that in mind and trade accordingly. We have a lot of stuff related to the market developments available on the Dukascopy analytics page, so check it out, give it a try. And for trying out this newly released platform, the link has been included in the bio. So let me know how it works out for you, both the platform as well as this kind of formation. So I'm signing off for the day. Tomorrow I will be back with the new formation, new data points to discuss, and of course, many new things to talk about. So do come back. Have a fabulous day and hopefully a profitable day as well. See you tomorrow. Goodbye.